As we're approaching the end of the analyst month, I want to go over the small little details before we truly end it. Now, right here, a small little detail is the further targets. So we have had the context target. We understand what the context target is, but now we need to understand what is actually the highest probability target. And it's important because when we are in a trade, we don't want to hold that trade for very long and it already runs and then it comes back all the way towards break even because we are holding that trade for too long. We want to get out at the perfect moment in time as well. Now, in the further targets, let's go over the first slide. We want to go back to the basis. And the basis right here is the foundation levels again, but I want to start back at number 1 at the bias, because what did we actually do and what did we do in one of the most, the earliest videos? We mentioned mark out every single PD array on your chart. And when you do that, those further targets will also make a lot more sense. And I'll show you in a little bit what that exactly looks like. Now, if we mark out all those PD arrays on our chart, we can also figure out the context, right? Because we're always in between either a premium array and a discount array. So when we figure out that context and we move from a premium array lower, for example, towards the first discount array, which is then the context target, and below that, we have the further targets that we have already marked out. So looking at this as well, if we are in a trade ID or if we are getting towards a trade ID, context here is very important. And the following two things, it's very important to understand. We want to be in the trade before we reach the context target. If we want to target further, we can, but it is lower probability. So what does this exactly look like in a chart? A good example of this is the E-mini S&P right here, where we are potentially retracing towards this fair value area right there. So we can potentially look to target that as well. We have this previous day high, which acts as a premium array, which we can potentially continue lower from. Now on the 1 hour, we see that we have a 1 hour sharp turn, actually 1 hour fair value gap lower right there, which we can also potentially continue lower from after sweeping that previous day high. So right here, in this leg higher right there, we have all sorts of, again, resistance, what we also went over. We have all sorts of PD arrays. So if we mark out every single one of them, we have this one, that order block right there. We already came into the fair value gap right there, so I'm not going to count that. We have this order block right there as well. And after that, we just have the swing lows sitting right there. So that is when the low resistance or the no resistance liquidity run starts right there. Now, if we want to look at the context here, we start off with this 1 hour fair value gap right there, which we can continue lower from. Now, if we want to continue lower from that 1 hour fair value gap, the first target will be this previous candle low sitting right there. So that is the context target actually sitting right there. So let's remove this one and this one right there. That context target is the highest probability target, as in we will most likely reach that target. But after that, reaching the other targets, yes, in hindsight, this is very clear, but that's not the highest probability, because the further a target, the lower probability it actually is. And I'll explain in a little bit as well why that exactly is. So right here, if we now want to get involved in a trade, then we have context areas, the same right here. We have this 1 hour value gap towards this swing low right there. These are the context areas right here. This is a context area, that gray box. And this right here is also a context area right there, this gray box. So on the lower time frame, 5 minutes on the 1 minute, that's something we'll go over later on as well in the execution month. That is right now where we are looking to get involved. So if we want to hold a trade towards lower targets like this and towards eventually the lowest target that we have sitting right there in that leg, then we want to get involved always in a context area. Not below it, not above it, just in the context area. So for example, on the 1 minute time frame, we are not looking to get involved below this gray box right there. Every entry is inside this context area, and we can refine that context area, of course, from that high towards that low right there. After we reach the low, that context is taken, so we need new context. The new context happens after, and that is where we have the new gray box. Let's see, we have that new 1 hour value gap right there, and that is where we can again continue lower from. So from that high towards that low, that's exactly where we look to get involved. Once we take the context target, we are not looking to get involved again unless we have new context again. That's very important to understand because we're always trying to, again, a little reminder, we're always trying to get involved in context. So for that trade ID, once we are in a trade and we entered inside the context area, which is important, we have first target, the context target. After, we can potentially target further, but that is lower probability. How we can fully do that, how we can target further as well, how we do that with risk management, etc. All things we are not going to go over just yet, but we will go over in the execution month. Now, right here, moving on, we see the probabilities. And the probabilities right here is also something we already mentioned, but I want to go over multiple examples as well. The context right here, the context high/low is the highest probability. After that, we have the first resistance area. So first area of resistance, same time frame, unmitigated PD array, that is mid probability because that target is a little bit further. But if we have no resistance anymore after that, that can still be targeted. Again, remember what that resistance is. It's the same time frame and it's unmitigated PD array. So it's not something we have traded into before. If a fair value gap has already been traded into once, then the fair value gap is not valid anymore, but the PD or the swing high, swing low, or the previous candle high, previous candle low inside that fair value gap is the valid PD array, not the fair value gap anymore. After that, it's every PD array. Every PD array after the first resistance area is again the lowest probability. So let's go over a few examples. So when we were looking at E-mini S&P, we mentioned those PD arrays right there. This is resistance. This order block right there is also resistance. Where does the no resistance happen? Once we take out those lows, we run those lows. So here we see some kind of resistance because we're still, again, potentially sweeping that low with that wick at the bottom. And after that, the no resistance happens because that is where we have the big run as well. And we only have swing lows left after that. Now, if we are looking to get involved inside a context area, so let's mark out a random fair value gap where we say we could have entered. So let's say here, right there, we are getting involved in the context area because we have not taken that low yet. Perfect. After that, we don't want to look to get involved again. We can target this low right here, but let's say that low is quite close and we can't get the RR we want to, the risk to reward. So then what we can do is target the first area of no resistance after that. So what after this low is on the 1 hour time frame, because that is where we had the context, so the same time frame right here. What is now the next area of potential resistance? Well, we have this swing low right there. So if we want to get out, that swing low is a perfect target, the next target, because that is where we have no resistance. If we are reaching this low, then we are most likely also going to reach that low right there. If we are going to reach this low, then we are most likely also going to reach that low right there because there's no other resistance anymore. If we reach that low, then most likely we are also going to reach that low right there. Now, again, this is where we have to be careful with every target afterwards is lower probability. So can we always target a 1 to 6 right there and have a crazy high risk to reward? No, because that is low probability of it constantly playing out. A high risk to reward comes at the expense of a lower win rate. We're going to take more break evens. But right here, if we target, for example, this, then that is perfectly fine. That's a perfect balance between the risk to reward and the win rate as well. So find that next target where we have still a no resistance run. If your target and your risk to reward is already quite high inside the context, then you can aim for something inside the context even. So let's say we had on the 1 minute time frame, we are looking to enter a trade. We're looking to enter that same exact trade right there, but our entry was very accurate right there. And targeting that context low sitting right there is already a 4 RR, so a 4 risk to reward right there. Perfect. Then we don't have to target that context low because even within that context low right there, here on the 1 minute time frame, this is where you now use the 1 minute time frame because you are looking at 1 minute entry, 1 minute target right there, where you can look at a target on the 1 minute instead right there. Now, eventually, we can look at partials, we can look at scaling out of a position, etc. But that is something we're going to go over in the execution month as well. Right here we are on crude oil, and I want to show you an interesting context area right here, because we have this 4 hour. We come into that at that moment in time, and the first context target actually is this swing high that we have right there, which we can see we are sweeping that. Now this is why context highs are quite high probability, as in we are most likely going to reach a context high or a context low. After that, the entries become a little bit tricky if you do not pay attention to a sweep versus a run anymore. And why is that? Because usually when price, well, always when price wants to continue lower in a situation like this, then it's going to continue lower off of a premium array. So if we are about to continue lower right here off a premium array, then we are bouncing from this discount array towards that swing high, the premium array, sweeping that liquidity lower to fuel the move actually lower right there. That is why sometimes you will see context highs getting swept or context lows getting swept and then doing the opposite move actually. And that's quite important to understand, because oftentimes people think it will just go to the moon. That's not true. We are always working with probabilities. Everything I mentioned here is never 100%. I can give you the highest probability and the lowest probability thing to happen, but nothing is 100%. So sometimes we will not even reach the context target. Sometimes we will not even get a rejection of the PD rate that I want to look at higher prices from. But every step further, as further from that PD rate, is going to be lower probability. So the closer the step towards the PD rate is higher probability. What I mean by that is we are most likely going to have some kind of resistance from that discount array in the form of that fair value gap. That's the highest probability thing to happen. Then after, the next step of probability is, but a little bit lower probability than just that resistance, is we might get an entry pattern. Then after that is, okay, we might get that entry pattern and we might hit our target, but that is even lower probability than just getting an entry pattern. So then after that, it's hitting the context target. So reaching the context target, but that is even lower probability than just the resistance, than just the entry pattern, then hitting the target, then hitting the context target. So after that, any other PD ray, any pre-ray after that is lower probability than the context target, because we are moving further away from, we are demanding more from price action. We are moving further away from that discount array where we expect something from. That's very important to understand those different probabilities. So right here, if we actually want to continue lower, we do get that unusual context right there, which we also see. And that is oftentimes where we also get unusual context after sweeping a context high to then continue lower into a lower discount array actually, because we are using that premium array to actually fuel the move lower. Because if we want to continue lower, we will continue lower off of a premium array. So to sum this topic up, what did we go over? We mentioned again, marking out every PD array that will create context, but that will also create further targets. So for example, right here, marking out every single PD array that we might have right there is where we can create context, is also where we can create further targets. So we have these right here. We have this high right there. After that, we have these lows sitting right there. We also have this low sitting right there. Now, when we have two lows that close to each other, it's very unlikely that we are going to sweep the first one to then all of a sudden continue higher. When they are that close, again, there's no resistance from this low towards that low. So most likely the lowest low is going to get swept. Now, the reason that's quite important for me is because that saves me a line on my chart. So my chart becomes a little more easier to the eye. Then after that, we have all kinds of targets to the left right here. So the important thing to understand is, again, that this is ideally on the same time frame or a time frame above it target and unmitigated. So we have not traded back into them before, where again, fair value gaps that have already been traded back into is not something that we want to use as target. For example, here, this fair value gap is already traded back into that first time with that swing high right now. So if we want to continue lower again, we are not continuing lower off the fair value gap, we are continuing lower off the swing high right there. So if we now get involved and we want to get involved in the context target, we are continuing lower off of that premium rate, and this is the first context target right there. So if you go into the lower time frame, then let's say our entry on the lower time frame was something like this, and we cover those highs. We'll get into those executions later on. Then we target the first context low right there. That's already a 5 RR, 5 risk to reward ratio. That's already quite high. So we can even get out earlier if we want to, or we can get to the partial stage where we scale out of the position. Every target after right here is what we expect to act as resistance right there. The first thing we want to see is, are we actually running this context low or are we sweeping it? Because of course that context low, if we want to continue higher, then this context low might be used as liquidity, as discount rate to continue higher off of that instead. So we always need to keep an open mind. We need to keep and we need to take into account that we might not be bullish. We might not be targeting all these lows right there. This is very unique for this to happen. This is very unlikely. There might be a day in a month or a couple of days, maybe 3 days in a month where this will happen, where you can get into a 5-minute trade and you can hold that trade for very, very, very long right there. But that is not something that's going to happen on a daily basis. So that is why the context target that is going to be reached, that is something that might happen on a daily basis. So understand those different probabilities as well. Very important. So right here on the dollar, we are seeing something very interesting, and feel free to study this in your time as well. We are coming off of this daily fair value gap right there, which is also the fair value area. We mentioned that actually in the previous video, which we can continue higher off of. Context target is sitting right there on the daily time frame as well. On the 4-hour time frame right here, we see that we are coming off of this 4-hour fair value gap right there, which also has a context on its own, right? It's daily context, and in that we have 4-hour context. This fair value gap is what I meant with, we already traded back into that, so we don't need to take that into account as resistance. It's already mitigated. We want to see we want to look at the unmitigated PD rates. Now looking at this context area, target this context high right there, we can see these are early signs of a sweep, where this premium rate could actually be used if we do want to continue lower instead, or we want to consolidate. So we have to be careful that we might not reach that daily context high right there based on the 4-hour context right there. So if we now want to continue higher, then the next target is this daily context high. After that is the same thought process, which oftentimes what you will see, and what you will see with a tricky third candle, what I mean with the tricky third candle again, is based on that fair value gaps video. We are trading a weekly third candle right there. And when we trade a weekly third candle or any third candle, oftentimes on the time frame below it, we will finish the context, but we will sweep the context high or low to then trade back into the fair value gap. So what does that look like? Oftentimes right here, when we create a weekly candle or any fair value gap right there, and we are trading the third candle, then we might be finishing this context right there to then use this premium rate to then sweep, to then come back into the weekly fair value gap, where we create usual context right here to continue higher a little bit, unusual context to continue lower into the weekly fair value gap, to then create usual context to continue higher again. So that is a phenomenon that happens oftentimes. Feel free to study that, and feel free to study the delivery right here on the dollar as well. Will be very interesting to see. So from those probabilities, we can already move on to practice. So again, study those context areas. I would highly advise the dollar, very interesting situation right now. Then study the further targets as well. Understand the probabilities, how far we can move, etc. We don't always have to move towards target. It's all about probabilities. Then next is the analyst month, and we are going to recap everything and give you a top-down analysis as well on Friday. All right, perfect. Thank you.